What is really happening with XRP right now? Something unusual is taking place in the financial markets, and smart investors are starting to notice it. While major technology stocks continue to rise to fresh highs, XRP and the wider crypto market are not following the same path. Normally, when big tech companies surge, crypto often gains momentum too. But this time, the connection looks broken. That is why today we need to understand what this means, what may happen next, and why XRP holders should pay close attention. Welcome to XRP and Gold-Silver Scope. Across the stock market, major companies are showing powerful moves. Large names in artificial intelligence, semiconductors, cloud computing, and online retail are attracting massive capital. Investors are pouring money into companies they believe will dominate the future economy. This includes businesses involved in AI chips, data centers, software systems, and digital infrastructure. The excitement around these sectors has created one of the strongest rallies seen in recent months. This type of move is not random. It is being driven by belief, momentum, and expectations. Big institutions are betting that AI will transform industries, increase productivity, and create new trillion-dollar opportunities. Because of that, they are willing to pay higher prices now in hopes of larger rewards later. When institutional money enters a sector, it often lifts the entire group. But here is where things become interesting. Even though technology stocks are climbing aggressively, XRP has not matched that strength. XRP moved higher for a short time and tested an important resistance zone, but instead of breaking out, it quickly pulled back. This tells us that crypto traders are reacting differently than stock investors. Why does that matter? Because markets often reveal hidden information before headlines explain it. If one sector rises while another weakens, it can signal changing sentiment, liquidity movement, or fear beneath the surface. XRP's hesitation may not be weakness alone. It may be the market sending an early message. One major reason behind this disconnect is investor focus. Right now, many traders are chasing fast gains in stocks linked to AI and technology. They are moving money toward whatever is hot in the moment. This often happens during emotional rallies. People see prices rising, fear missing out, and rush in late. That creates temporary momentum, but it does not always last. Meanwhile, XRP investors are watching different factors. Crypto markets care deeply about interest rates, liquidity conditions, regulations, and global risk appetite. If traders are uncertain about macroeconomic conditions, crypto can pause even while stocks continue higher. That is exactly why XRP may look slower now. Another key point is that crypto trades all day, every day. Stocks have opening and closing hours, but XRP reacts instantly to world events. If there is tension in global markets, rising oil prices, policy uncertainty, or risk concerns, crypto often prices that in faster than stocks do. In some cases, crypto becomes the early warning system. For XRP specifically, price behavior near resistance is very important. When a market reaches a strong ceiling and gets rejected, traders become cautious. Some take profits. Others wait for confirmation before buying again. This creates short-term weakness, even if the long-term outlook remains strong. That does not automatically mean XRP is in trouble. In fact, many strong assets experience pullbacks before larger moves. Markets rarely go straight up. They test patience, shake out weak hands, and reward disciplined investors. XRP has done this many times before. What many people miss is that sideways movement can be preparation. When price consolidates after testing resistance, it often means buyers and sellers are battling for control. Once one side wins, the next move can be sharp. This is why current XRP price action deserves attention rather than fear. The smartest investors understand timing matters. Buying after a huge stock rally because everyone is excited can be dangerous. Chasing late momentum often leads to regret. But studying assets that are consolidating while the crowd ignores them can uncover stronger opportunities. Right now, XRP may be in that overlooked category. While headlines celebrate stock rallies, XRP is quietly building tension. If market conditions improve, liquidity returns, or crypto sentiment strengthens again, XRP could quickly regain momentum. So the first big lesson is simple. Do not judge XRP only by one short-term pullback. Markets rotate, attention shifts, capital moves in cycles. Today, the spotlight may be on technology stocks. Tomorrow, it could return to crypto. And when that shift happens, assets like XRP often move faster than people expect. Now let us go deeper into why XRP is reacting differently from the stock market, because this is where many people get confused. Most investors assume that when stocks rise, crypto must also rise. Sometimes that is true, but not always. Markets move in cycles, and each asset class responds to different forces. XRP is currently showing us that it is following its own path. The stock market right now is being driven by earnings expectations and future growth stories. Investors believe major technology companies will continue making huge profits, especially through artificial intelligence, cloud services, advertising, and data systems. This optimism creates strong demand. Traders buy shares before reports are released, hoping results will beat expectations. That kind of rally can continue for some time, but it is often fueled by emotion as much as fundamentals. When people expect good news, they buy aggressively. If the news is great, prices may keep climbing. But if expectations are too high, even strong results can disappoint the market. This is how sharp reversals happen. XRP is different because it is not tied to quarterly earnings. XRP is connected more to adoption, utility, liquidity, regulations, and broader crypto sentiment. That means while stock traders focus on company profits, XRP traders are looking at entirely different signals. One of the biggest signals for XRP is money flow. When investors become excited about stocks, especially fast-rising names, some pull money out of crypto temporarily. They move capital where they think short-term gains are easiest. This creates selling pressure in crypto, even if the long-term story remains strong. That does not mean XRP is losing value permanently. It often means attention has moved elsewhere for now. Markets are full of rotation. Money chases momentum, then later returns to undervalued areas. Smart investors track where capital is leaving and where it may return next. Another important factor is fear and caution in global markets. Rising oil prices, geopolitical tensions, inflation concerns, or uncertainty around interest rates can impact crypto quickly. XRP traders know that tighter liquidity conditions can slow risk assets. Because of this, crypto sometimes reacts faster than stocks. Think of it like this. Stocks may still be dancing at the party, but crypto may already hear the music slowing down. That is why XRP pulling back while stocks rise is not necessarily bearish. Sometimes crypto corrects first and recovers first. Sometimes it leads broader market direction. Sometimes it simply pauses while leverage gets reset. For XRP holders, technical levels matter greatly right now. XRP recently tested resistance and failed to break through. That creates caution in the short term. Many traders wait for a clean breakout before entering. Others sell after rejection and hope to buy lower. This can keep price under pressure for a while. But resistance rejections are common in healthy markets. Price often tests a ceiling multiple times before finally breaking above it. Every test weakens seller strength if buyers keep returning. That means repeated attempts can actually be bullish over time. Patience becomes powerful here. Many retail traders make the mistake of selling strong assets during boring phases and buying hot assets after massive pumps. This emotional cycle hurts performance again and again. They sell low-attention assets and chase high-attention assets too late. XRP may currently be in the boring phase, and boring phases often create the best setups. When an asset is quiet, ignored, or consolidating, smart money studies it carefully. They know explosive moves often begin when public interest is lowest. By the time headlines return, much of the move may already be underway. Another thing to remember is XRP has a unique market identity. It is one of the most recognized digital assets globally and often responds strongly when crypto momentum returns. Because of this, XRP can stay quiet for weeks, then suddenly outperform in a short period. This is why comparing XRP to a stock rally every single day can be misleading. Stocks and crypto are not twins. They can move together sometimes, but they also diverge based on different drivers. Right now, the market appears split between hype-driven stock buying and cautious crypto positioning. If stock earnings disappoint or broader sentiment cools, some money may rotate back into crypto. If that happens, XRP could benefit significantly. So the key takeaway from this stage is simple. XRP weakness today does not automatically mean weakness tomorrow. It may simply reflect where market attention is parked right now. And attention in markets changes fast, very fast. Now let's talk about what may happen next for XRP, because this is the question every serious holder wants answered. If stocks continue rising while crypto remains weak, does XRP stay slow, or is this the calm before a stronger move? The truth is, both short-term caution and long-term opportunity can exist at the same time. At this moment, XRP is sitting in a zone where patience matters more than emotion. Many traders become frustrated when price does not move quickly. They start doubting their position, comparing XRP to assets that already pumped. This is one of the most common mistakes in investing. People compare current prices without understanding future potential. Strong market moves usually happen after periods of boredom. Before an explosive rally, price often moves sideways, shakes confidence, and creates doubt. This causes impatient holders to exit right before momentum returns. XRP has shown this behavior many times in past cycles. Right now, there are three major scenarios investors should watch carefully. The first scenario is bullish continuation. If the overall crypto market stabilizes, Bitcoin regains strength, and risk appetite improves, XRP could revisit resistance levels quickly. Once price returns to those zones, a breakout attempt becomes possible. If buyers gain control and volume increases, XRP may move faster than many expect. This is because breakout moves often attract fresh traders, momentum buyers, and sidelined capital. Once resistance becomes support, sentiment can shift rapidly. Fear turns into excitement, and hesitation becomes FOMO. The second scenario is continued consolidation. XRP may remain in a range for some time while the market waits for clearer macro direction. This could happen if interest rate uncertainty continues, stock market speculation stays dominant, or crypto volume remains low. Many people dislike sideways markets, but experienced traders understand they are valuable. Consolidation builds structure. It allows over-leveraged positions to reset. It creates stronger foundations for future trends. If XRP trades sideways while maintaining support, that can be healthier than a reckless pump. The third scenario is temporary downside pressure. If global markets weaken sharply, stocks correct, or fear increases across risk assets, XRP could retest lower support zones before recovery. This would likely scare many retail traders, but it would not automatically damage the bigger picture. In fact, some of the best opportunities appear during fear. Markets often overshoot downward before reversing upward. Emotional selling creates discounted entries for patient investors. So how should smart XRP followers think right now? First, focus on structure, not noise. Daily headlines can distract people. One day stocks rally, another day oil rises. Another day rates dominate discussion, but price structure, support levels, resistance zones, and trend behavior often matter more than emotional narratives. Second, understand that rotation can happen suddenly. Today, money may chase AI stocks. Tomorrow it may seek undervalued crypto assets. Markets are constantly searching for the next opportunity. XRP benefits when capital starts looking beyond crowded trades. Third, do not let social media urgency control your decisions. Many influencers create panic during pullbacks and hype during pumps. This usually happens at the wrong time. Real discipline means staying logical when others become emotional. There is also a psychological advantage XRP holders may have right now. When an asset is not the center of attention, expectations become lower. Lower expectations can create stronger upside surprise when momentum returns. If everyone expects a stock to rise, great results may already be priced in. But if many people doubt XRP, even moderate positive developments can trigger stronger reactions. Another factor to remember is crypto sentiment changes faster than traditional markets. Because XRP trades in a 24/7 environment, momentum can return overnight. A week of weakness can quickly turn into a week of strength. This speed is why preparation matters more than prediction. No one can guarantee exact price targets or exact timing. But we can recognize when an asset is being overlooked, compressed, and misunderstood. Those conditions often matter. So instead of asking only, why is XRP not pumping today? A smarter question is, what setup is XRP building for tomorrow? That shift in thinking separates emotional traders from strategic investors. Right now, XRP appears to be in a waiting phase, and waiting phases can become launching phases very quickly when the right catalyst arrives. The crowd usually notices XRP after the move starts. The prepared investor notices before it begins. Now let us talk about the biggest opportunity many people miss during moments like this. When markets become obsessed with one sector, they often ignore value elsewhere. Right now, much of the spotlight is on technology stocks, artificial intelligence, and companies already making huge moves. But history shows that crowded trades do not stay crowded forever. When everyone rushes into the same area, prices can become stretched. Expectations rise too high. Traders assume gains will continue endlessly. That is usually when risk increases the most. Meanwhile, assets that are consolidating quietly can become the better risk-reward setup. This is where XRP becomes interesting. XRP is not moving based on hype alone. It is trading through resistance battles, support tests, and market rotation pressure. That can feel frustrating in the short term, but it also means much of the emotional excess is being removed from the price. Strong markets often need this process before larger trends begin. Many retail traders only feel confident after price has already surged. They buy green candles because rising prices feel safe. But often the safest-looking moment is actually the most dangerous, because late buyers enter after most of the move has happened. On the other side, disciplined investors study assets during uncertainty. They look for strong support zones, repeated rebounds, healthy consolidation, and signs of seller exhaustion. XRP is the kind of asset many serious traders watch closely during these quieter phases. Another important concept is market memory. XRP has one of the strongest recognitions in crypto. It has a global audience, deep liquidity, and a history of making sharp moves when sentiment returns. Because of that, XRP can remain slow longer than people expect, then move faster than people imagined. This pattern catches many people off guard. They spend weeks ignoring XRP because it looks inactive. Then once price breaks out, they chase late. By then, risk increases and patience would have paid more than emotion. That is why preparation is so valuable right now. Preparation means understanding key levels. It means knowing where resistance sits, where support holds, and what signals would confirm renewed strength. It means having a plan before volatility returns. Without a plan, people react emotionally. They panic during dips and FOMO during pumps. With a plan, they stay calm and make clearer decisions. There is also a broader market angle to consider. If technology stocks begin slowing after earnings excitement fades, some capital may look for the next sector with upside potential. Crypto can become attractive quickly when that shift happens, especially if Bitcoin stabilizes and altcoin confidence returns. When crypto sentiment improves, XRP is often one of the names people revisit fast. Why? Because XRP is familiar, liquid, and highly discussed across the market. It does not need years to be rediscovered. It only needs momentum. That is why current weakness should be studied carefully, rather than mocked or dismissed. Quiet phases can hide future strength. Another mistake people make is thinking every day must be exciting. Real wealth-building setups are often boring at first. They test conviction. They reward patience. They appear obvious only after the move is complete. This is true in stocks, crypto, commodities, and nearly every market cycle. For XRP, the current environment may be doing exactly what strong setups often do, removing impatient holders, shaking confidence, and building energy below major resistance. If that resistance eventually breaks, sentiment can change very quickly. And remember, markets move from disbelief to interest, from interest to excitement, and from excitement to mania. XRP may still be earlier in that emotional cycle than many realize. So instead of asking why XRP is not the hottest asset this week, ask whether it is building conditions to become one later. That question can change everything, because the best opportunities usually feel uncertain before they feel obvious. Now let's bring everything together and focus on what matters most for XRP holders going forward. The current market is showing two different stories at the same time. On one side, technology stocks are enjoying strong momentum, fueled by excitement, speculation, and expectations of future growth. On the other side, XRP and much of crypto are moving with more caution, reacting to liquidity conditions, macro uncertainty, and key technical levels. This split may look confusing, but it is actually normal behavior in rotating markets. Money does not stay in one place forever. It moves from sector to sector, chasing opportunity, safety, momentum, and value. Today, attention may be on stocks. Tomorrow, it may shift back toward crypto. That is why patience is such a powerful advantage. Many people lose money because they always chase what already moved. They buy after headlines become loud. They sell when markets become quiet. This emotional cycle repeats again and again. But disciplined investors know that silent phases often come before strong phases. XRP right now may be in one of those silent phases. The price has faced resistance. It has seen short-term pullbacks. It has dealt with capital rotating elsewhere. But none of that automatically cancels future upside. In fact, these periods often create the setups that stronger rallies are built on. If overall crypto sentiment improves, if Bitcoin regains momentum, if liquidity conditions become friendlier, or if traders rotate back from crowded stock positions, XRP could respond quickly. Markets can stay quiet longer than expected, but when momentum returns, they can move faster than expected too. This is why mindset matters. Instead of asking, why is XRP not pumping today? Ask, what is XRP building for the next phase? That single question shifts your focus from frustration to strategy. Smart market participants watch for confirmation. They monitor support holding strong. They watch resistance being tested again. They study volume returning. They stay prepared rather than emotional. No one can predict every short-term move perfectly, but people can improve their odds by understanding cycles, avoiding panic, and refusing to chase hype blindly. The biggest winners in markets are often not the loudest traders. They are usually the most patient ones. So keep learning, keep watching the charts, keep controlling emotion, keep focusing on long-term opportunities instead of short-term noise. XRP remains one of the most watched assets in crypto, and when attention returns, it can return fast. If you enjoyed this breakdown and want more simple, smart XRP market analysis, make sure to support XRP and Gold Silver Scope. Follow the channel, stay connected, and never miss the next major XRP update.